It was good to have you all in Melbourne last week.
Yes, yes. Hopefully we brought some nice weather. It was a bit of fun.
Yeah, absolutely. However, last week there seems to be a whole nother round of DPNs being issued by the ATO.
Yes, yes. It seems to be a constant flow at the moment. It's certainly a very topical thing and something that we're seeing a lot of, and it's certainly creating a lot of, I guess, activity and angst for company directors. So probably timely that we talk a little bit about them at the moment.
Yeah, absolutely. I think one of the biggest issues that I'm seeing is a lot of people don't understand how a director penalty notice makes them personally liable for their company's debt. I still think there's a lot of feeling in the community that if a company has a tax debt, that personally they're okay.
Yeah, look, you're 100% right. In fact, I had a meeting just before this with a business advisor who's been doing it for a long time, and they were quite shocked to know that, people set up a company in order to protect themselves personally and to be able to say, well, look, that works in many, many cases, but certainly doesn't work with the ATO. And I guess for those that are sort of watching this that maybe don't know what a director penalty notice is, or maybe have heard about them but don't really know the ins and outs, just sort of quickly we might run through that. And broadly, a director penalty notice is part of a thing called the director penalty scheme, which allows the ATO to make directors personally liable for broadly three. There's a few of them, but the main three are unpaid superannuation, unpaid pay-as-you-go withholding, and unpaid GST. And the way they work is that if a director fails to have the company pay those things, then they actually become personally liable. And if the ATO want to then enforce against them, they have to issue this thing called a director penalty notice, which is a precondition to enforcement. But the directors already become personally liable for these debts, and if the company doesn't pay them, then the ATO can and will pursue them directly for those debts.
Absolutely. So they're very serious. However, I also like to see the upside of things, and that there is ways to prevent further action from happening. And there is ways, even if you get a director penalty notice, obviously, ideally, it is to prevent ever getting one. But if you do get one, there's still things that can happen. I had a client who was a tyre seller, a retail tyre seller, and they'd been massively affected by the lockdowns, by the supply, and had a hangover debt still from COVID, as so many businesses and people do. And they had received a DPN, but only spoke to their accountant 3 days before it was about to expire. So the accountant was extremely concerned, and they had an outstanding lodgement. So they'd called the ATO themselves, however, they were unable to get into a payment plan because they had that outstanding lodgement. So the accountant advised them to call us. They engaged us, and we acted very quickly. They had approximately 400,000 in debt, and about 70,000 of that was interest and penalties. So what we were able to do is within a week and a half, we got them into a payment arrangement, even though they had that outstanding lodgement, and the arrangement allowed for them to lodge that. And we also got $70,000 knocked off that total amount of the debt up front. And once they were in a compliant position, in practice, the ATO won't take any further action against the directors personally. So all of their assets, including their house, are safe. I think that's actually an important thing too. People say, well, can the ATO take my house? If they issue a director penalty notice, and if the process is followed down the whole line, arguably the ATO could, at the end of a recovery action, the house could be at risk, even if it's a company debt.
Yeah, Olga, that's and it is as serious as that. And you're right, we often have that. The ultimate thing is if the ATO chase a director down for a director penalty notice is bankruptcy and they lose their house. But look, awesome outcome that you got for that client, and they must have been very relieved. We had a similar one just recently. It was a winery in WA, and they again had a reasonably significant debt. Fortunately for them, we got it a little bit earlier because they had a really good internal CFO and accountant who were aware that the ATO were issuing these director penalty notices, and were aware that their primary tool that the ATO are using at the moment is to actually issue these director penalty notices rather than worrying about having to wind up the company. So they got in contact with us, and when we engaged with the ATO, they were about 5 minutes away from issuing one, and we were actually able to stop it in that situation, get the company into a formal and enforceable payment plan, And similarly, as with most of our clients, we were able to get quite a good chunk of the debt removed as well through getting the interest and penalties around about $100,000 in interest and penalties, which made a huge difference to them from a cash flow perspective. But that's a situation where if you get in early enough and actually get on the front foot with the ATO, you can actually stop the issue of the director penalty notice altogether. Because people often say to me, well, how do we avoid getting one of these? Well, the way you avoid getting one of these is actually get in contact with the ATO and get into an arrangement, show that you're engaging, and then the ATO, there's no need for them to issue the director penalty notice.
And that is the only sure way at the moment. It used to be that if you were making voluntary payments, or if you have been talking to the ATO, that would be enough to stop further action and further recovery action by the ATO. But at the moment, being in a compliant payment arrangement that's been accepted by the ATO is the only absolute way to stop the director penalty notice, stop the director liability, and stop further action.
Yeah, look, and I think it's probably good to put some context around this and just to sort of explain to those that are listening how the landscape has changed a little bit since COVID. Prior to COVID, director penalty notices were not a primary tool that the ATO would use, and they predominantly reserved them for people who were maybe had some form with the ATO and had a very high risk rating, and they were concerned that there was maybe they were going to liquidate the company and they wanted to get the directors on the hook. That's changed totally since COVID happened, because as we all know, during COVID, the ATO stopped collecting debt. Uncontested ATO debt went from around 23 billion to over 45 billion. And now the ATO are really getting serious. But what they've also done is taken, I think, time to sit down and say, well, what's the best way for us to recover this debt? And the primary tool used to be winding up. And that's a long and expensive process with the ATO, whereas the directed penalty notice, as you know, is issued by literally the push of a button on a computer. And what it's now doing is forcing directors, particularly in situations where they have an ability to avoid the directed penalty notice by putting the company into administration or liquidation, forcing them to make a decision on, how much do you stand by your company and if you can pay this debt. And then just looking at numbers, in March they sent 52,000 warning letters out. They've sent another 20,000 out a couple of weeks ago. They've issuing, and it's a bit hard to get exact statistics, but the number keeps going up. And the last statistic I saw was 150 of these director penalty notices every day. So I think if I'm a director of a company and we have ATO debt, I would be, and I should be, concerned about getting one of these in the post, particularly if there's a little bit of currency around the debt, and the ATO have been unsuccessful in getting in contact with them.
And when you talk about a push of a button, that's exactly what's happening. And I often say that a computer can't read a note. So even in circumstances, if your accountant has spoken to the ATO or you've called the ATO, even if you've told them that you're having difficulty paying, at the moment that's not enough. The computers are still issuing the director penalty notices. So it's not a matter of saying, oh, well, the ATO aren't knocking on my door, or I haven't had a warning letter, so I'm okay. You might not get a warning letter, or you might not get anything before a director penalty notice is issued. There's not a set recovery process by the ATO. There's different measures that are taken at different times. So just because you haven't had what you think is enough warning doesn't mean that you won't get a director penalty notice making you personally liable. But as I said before, if you actually are proactive and don't wait for that knock or don't wait for the warning and get into an active arrangement now, then that will stop that level of personal liability crystallising. And an arrangement that you can afford. I think some people feel that compliance means the whole debt has to be paid, or that you have to pay a huge amount upfront. But when you are negotiating like we do, where we understand the playing field, we understand the parameters, we're able to get payment arrangements that people can afford, even at this time of year, that take into account cash flow, that take into account ongoings. And the terms aren't dictated by the ATO. They actually work directly and bespokely with each client's business.
100%. And look, as you well know, a mantra we've had in this business for years is, don't wait for the ATO to come knocking, get ahead of the game, and be proactive with the ATO. And I think, certainly I've been doing this for, 10 years. Certainly, I think there's never been truer than it is right now, given the ATO's use of the director penalty notices, because as you say, the only way to really ensure that you're not going to get one is it's no longer a case, and we see them every day where we're speaking to accountants and say, oh, this director penalty notice has arrived, but we were talking to them, we were negotiating with them. I had one last week, and they had an application in with them, and the application was looked at and refused, and a director penalty notice issued with the refusal. And so it's not enough now just to say, look, we're engaging. It is a case of saying you actually have to have that piece of paper from the ATO to say you're in an enforceable arrangement, or as a director, you're at risk. I guess the other thing we can talk about is, directors who get a director penalty notice, what do they do? And I think, the clear message for that is the same message: engage, because what we can do is we can engage in two ways, depending on where the company's at. We either engage on the company's behalf and get the company into an active arrangement. And even though the director's got the director penalty notice, under the ATO policies, as we know, they won't pursue the director personally whilst ever the company is then compliant in their arrangement.
I've got one at the moment that I'm helping a particular client where they actually had a director penalty notice about 2 months ago. So it has expired. They didn't know where to go. They didn't know what to do. And we're in the process of getting them into an active arrangement right now. And so once they are in that active arrangement, even though it's expired, it will have the practical effect that no further action will be taken against them personally.
Yeah, that's it. And that's the way. And I think people need to understand it's a parallel liability. So if the company deals with the debt, every dollar that's paid down by the company is a dollar that comes off the director's director penalty notice, to the extent that they're lined up. So it's really important. And I think the other one we've seen a bit of at the moment is, and I had one just last week, where directors have, their business has been in trouble and they've engaged with the liquidator. And we had one where they put the company into liquidation, but they didn't quite do it quickly enough. And there were a couple of director penalty notices that were issued. One was caught in the period where they were able to do it, but the larger one, unfortunately, wasn't. And again, the director had thought, well, look, if I put my company in liquidation, that's the end of it. And it wasn't in this case. But again, even in that situation, the company, went into liquidation, but the director was still able to trade himself, and we were able to then get him into an arrangement, stop any recovery action. He had his home in his own name, his wife and he were, very concerned. But look, it's an IT consulting company. They've got good clients, good client base. But again, like many businesses, got into trouble during COVID through no fault of their own, and had an otherwise strong business, and they took the opportunity, I guess, or the steps to actually put that company into liquidation. Then, sometimes that's necessary, but we saw it after that. We may have been able to even stop that for them, and I suspect we probably could have, but that's the decision they made. But even at that late stage where the company's into liquidation, we're still able to help the director to stop the ATO taking his home.
Yeah, absolutely. And when you talk about parallel liability, that also happens when there's two directors. So it's exactly the same concept. So sometimes we see where there is a director and there was a director's dispute, and one says, well, why should I have to pay it? He can pay it. But they're actually both still personally liable until it's completely paid off. And so that's really important to know, that if the company is no longer trading, but there was that personal liability, that won't go away just because there's a director dispute.
Yeah. And unfortunately, as you've said, with directors, even though, it's a $200,000 debt, there's two directors, they're each liable for $200,000, not $100,000 each. They may have rights as against each other if one pays more than the other, but from the ATO's perspective, they don't care, and they'll pursue both to the full amount. And if one director has assets and the other one doesn't, well, unfortunately for the director who's probably worked hard and has assets, they're the one in the firing line. So it's the same. I think it's the same message. You can't put your head in the sand when this stuff happens. The director penalty notices have strict time frames around them, particularly ones where what they call a standard director penalty notice, whereby directors do have an opportunity to avoid liability, but you've got to act quickly, and you've got to act within those timeframes. And there's no wriggle room in those timeframes. So it's not a straightforward process. There's a couple of different types of director penalty notices. As you know, there's quite a lot of complexities around it, and people just need to get expert help.
And get help at any point. There is nearly always help, and the right help is there. It's just finding what that's going to be to get you to the solution.